Kunal, hi, morning. A hugely volatile week behind us. And of course, Friday was quite the spooky one with that near about 150-point decline in the futures alone. To add to that, you've got a very weak handover from the globe and we're already down 200 on the implied open.
Yeah, I think, but over the last 2 or 3 days, the average tick for the index was as it is around 100 to 150 points on the downside. It was just that the opening was a bit more tepid, but the intraday action for the index over the last 3 days, 4 days was on the downside in terms of intensity. What we've also seen is that in the last 5 or 6 days, we've seen a pattern of consistent lower highs and lower lows for the index, both the Nifty as well as Bank Nifty. What matters over here now is that we retest the levels of 26,250 thereabouts for the index, which was first tested in the month of November 2024. So that would be the first major litmus test for the index in terms of a trend. Now, if we break below this 23,200 to 50 mark thereabout for the index, that's where we probably expect that the intensity of the correction could probably accelerate for the indices specifically. See, as it is over the last many days, many weeks, we've seen the broader market being at the brunt of a major sell-off. We've seen the advance decline ratio heavily tilted in favor of declines over the last many days when the index was falling. So the market breadth as it is into a negative territory. But the index selling was a bit more tepid or muted compared to the overall market breadth. So I believe now what could happen is that if we break below that 23,200 to 50 mark, then I believe that the index selling could also accelerate going forward.
All right, that's the day coming in on the benchmark indices. But with this, let's start taking the stock calls coming in from both of our experts. And Chandan, very good morning to you. Help us with your picks on the stock specific action, because in this kind of a market, are you still a buyer at the lower levels?
Good morning. Thanks for having me. So index has been making lower top, lower bottom, and we have noticed that every small bounce is being sold. Just a couple of days back, Nifty made high near 24,200, but that was exactly 50 DM on the daily chart. And after that, we are continuously forming the lower highs. As of now, till it holds below 23,650 zone, index has potential to go down towards 23,000 to 22,800 zone before it forms a durable bottom in the market. So we have to be quite mixed. The only sector which is performing well is Nifty IT, and selective IT counter can do well, while most of the other sectorial indices are showing sign of weakness. So looking at the same, recommending to buy on HCL take from the IT pack. One can buy with support of 1940. Technically speaking, the stock has been moving in a rising channel and recently taken support at its 50-day exponential moving average. So one can buy with support of 1940 for an upside target towards 2080. Second trading idea, that is on sell side on AB Capital. Weakest structure has been making lower top, lower bottom, respecting to its falling supply trend line. We have seen build up of short position. It has given a fresh breakdown. So with hurdle at 173, the stock can see further corrective move towards 158. So buy on HCL take from IT and sell on AB Capital for 4 to 5% decline.
Right, so those are the two calls coming in from our expert Chandan Thaparia. Still a buyer at lower levels for HCL Tech, one of the earnings candidate today, but a sell call coming in on AB Capital. But Kunal, help us with your stock calls and your ideas as well, because you're not sounding with green on the markets. Does that mean that you would like to be a seller at the higher levels or maybe at these levels as well?
I think it makes sense to have few more shorting candidates over here. So two sell calls. The first one is a sell on Piramal Enterprise. The stock is now on the verge of a break below its 200-day moving average, which is placed just around that 970-75 mark thereabouts. So expecting the stock to drag further. My earlier targets were closer to 1,000, so revising it downside to 975. Traders could look at a fresh bet with a revised stop loss at 1,020. Axis Bank is the other stock which again confirmed a fresh multi-week, multi-month low on Friday, breaking below the 1,040 mark or closing at those levels. So would look out for targets on the downside closer to 1,000, stop loss to be kept at 1,060.
Okay.
If you like this video, then like, share and subscribe to ET Now.